Yeah, good evening, everyone. On behalf of Hyderabad Chartered Accountants Society, I extend a warm welcome to all of our members and professional colleagues to today's session on decoding labor codes, covering compliance, cost, and consulting opportunities. India's labor law landscape has undergone significant reform with the enactment of four consolidated codes. They are the Code on Wages, Industrial Relations Code, Code on Social Security, and Occupational Safety, Health, and Working Conditions Code, which are aimed at streamlining the labor law framework. As implementation progresses, businesses must reassess the compliance and cost structure, creating both regulatory responsibilities and consulting opportunities. On this note, I would like to introduce our presenter, Mr. C.A. Raman Heda, who is a partner at RVKS and Associates and chartered accountant with extensive experience in corporate advisory, regulatory compliance, and financial strategy. A commerce graduate from Osmania University, Hyderabad, he qualified as a chartered accountant in 2017 and has been associated with the firm since 2014. He specializes in corporate advisory, virtual CFO services, and labor law compliances. He has assisted startups, MSMEs, and growing enterprises in understanding statutory requirements, strengthening internal systems, and ensuring compliance with evolving labor and regulatory laws. He has also played a key role in other areas of works like financial due diligence, internal audits, MIS reporting, SOP development, and enabling businesses to build structured and compliant operational frameworks. His practical approach and strong understanding of the compliance systems helps organizations manage risks, optimize costs, and align with regulatory expectation. So, without any further delay, I invite CA Raman Heda to take over the session. Over to you, sir.
Thanks, Ekta, for the warm welcome. And let me first thank HCAS for having me here to speak on this topic. Let me just quickly share my screen and let us get into the presentation. So, before we begin, uh, all the participants, one quick ground rule. So, this session is for general awareness and knowledge sharing purpose only. What we have tried to do is we have tried to summarize the key provisions of the labor codes and what are recent developments have happened. We have spoke about the implementation status of each of those codes. What are the changes that have happened in those codes compared to the earlier law? Third, your implementation would also depend on how the central and state rules or the notifications would come in future and how they would interplay with the provisions of the code that have been notified till now. Third, with respect to interpretation, we have used certain examples which are only illustrative in nature, and those have been kept only for discussion purposes. Those should not be taken as a base for evaluating or taking any decisions for the implementation purposes. And this session is not a legal or professional advice that I'm trying to provide here. These are more of the provision that we have tried to organize and keep it at one place. At the same time, try to provide our individual views on it. Considering the way the labor law is evolving in the last few months, I would suggest that participants would also monitor the future notifications and amendments that are to come in before they take any action on these. Now, for today's session, we'll have the roadmap for the discussion with starting with the classification of the workforce under all the labor codes which are there. Second, we'll talk about few key definitions which are there in these labor codes. Then we'll move on to code-wise, talking about what are the acts that have been subsumed under these codes. Fourth, we'll talk about the background and timeline of each of those codes. Fifth, we'll talk about the structure, what are the chapters under each of these codes, and how those codes have been drafted. Then we'll talk about what has been notified under those respective codes, what is not notified, and what is yet to be uh, notified by the government. Next, we'll talk about to whom the code is applicable, what are the different thresholds under each of those codes. It will talk about the key changes that have happened compared to the previous law. Then we'll talk about the governing body, followed by the employer obligations or compliances which are there. Moving to operations and penalties, and then the FAQs. Few of the FAQs for each of those codes. Now here, we have tried to prepare a presentation covering all the codes. However, in case time doesn't permit, probably we'll talk about code on wages and code on social security first in detail. And based on time availability, we'll take up the other two codes as well. However, in case if we are not able to take up all the codes at one go in this session, probably we'll have a follow-up session based on how HCAS event calendar is planned for the next few weeks. With that, let us talk about first the overview of all the four codes which have been notified on 21st November 2025. Now, we first let us look at the code on wages. Now, code on wages is replacing four labor laws, and the code on wages talks about primarily the wage provisions. In code on wages, you have the concept of national floor wage, which has come in. Then, so these are the highlights of the code. We'll again discuss on each of those codes as we get into the few next slides to come. Then it also talks about the equal remuneration for the similar kind of work which is there based on the Equal Remuneration Act, which was there earlier in the codes. Then the Social Security Code, which consolidates the PF, ESI, gratuity, and it also expands to certain few other categories of workers, such as gig and social unionized workers, which are there. Third, we are talking about the Industrial Relations Code, which focuses on the union's dispute resolution and the workforce flexibility. Fourth, then we are talking about the occupational health safety and working conditions code, which is consolidating 13 existing laws and focuses on the health and safety of the employees. So we were talking about the overview of all the four codes and how these codes have are replacing the previous laws which were there in place. In this slide, let us see how the workforce has been broadly classified under each of those codes and how these have been defined. So we have the workforce classification based on sector. We have certain special categories which have been defined under these codes. Third, based on their status, we have a certain categorization which has come for the workforce. Fourth, we have based on their nature of engagement. Under sector, you have organized sector and unorganized sector, which comes in. Second, under special categories, you have building and construction workers coming in. We have the women workers specifically spoke about in the health safety code. Then you have hazardous occupation, which is spoken about in the code on social security. Then you have household and domestic workers covered under this category. Based on legal status, you have the regular employees which will come in. Then you have workers defined under the code. Then you have something called fixed term employees. We'll discuss on this in the coming slide, next slides to come, what these are and how they have been defined under the code. And then you have apprentices, which are again falling from the previous Apprentices Act. Based on nature of engagement, we have permanent employees. Then you have temporary casual workers or employees. Then you have contract workers. And lastly, we have two categories which have been introduced, which is gig workers and platform workers. This summarizes the workforce categorization under the codes based on sector, based on certain special categories which have been introduced, based on their legal status, and based on their nature of engagement. Let us look at certain key definitions. First, we'll start with employee. So employee definition is more or less same, which is followed from the previous acts which are there. wherein you have every person employed for wages other than apprentice and member of armed forces, where the terms of employment can be expressed in an agreement or unimplied. If you look at the scope of work being handled by the employee, you have skilled, semi-skilled, unskilled, manual, operational, supervisory, managerial, administrative, technical, or clerical work. Now, when you look at the definition, uh, this definition has been tried to kept wide, wherein if you compare it with the definition for the workers would also get covered under the employee definition ambit itself. So that way, the definition of the employee has been kept wide open or broad enough to cover any person who is working for wages. Employer. Uh, Similarly, the employer definition also includes anyone who is having ultimate control over the establishment. Now, whether it can be a occupier of the factory or manager, owner, agent or manager of the mine, head of department, chief executive, MD or manager of the company, contractors, or legal representatives of any deceased employer. Now, the intent is clear. They do not want the responsibility being diffused. So we need, from a risk standpoint, organizations, they need to ensure that this is clearly defined internally as to who is the employer and who will have the responsibility over the affairs of the location. Now, one of the most important structural changes, I would say, has come in terms of the wages definition. Um, when you look at the wages definition in the previous laws, whether it is under the which have got subsumed under the Code on Wages or Code on Social Security or Industrial Relations Code or the Health or Occupational Safety, all these acts had different way of defining the wages. uh, let's say, for example, you had a different definition under ESIC. We had a different definition under EPF, wherein only basic and allowance DA used to get form part of the definition or compliance purpose. Then we had a different definition under Payment of Bonus Act. We had a different definition under Gratuity Act. But with respect to codes, they have tried to define or have a unified definition under all the codes which have been notified. You have a single definition with respect to wages under each of these codes. Now, if you look at the definition, you have two parts to it. One, the definition is talking about something called inclusions, which is basic pay, dearness allowance, and retaining allowance. Then the definition specifically excludes certain items. Now, these items are bonus under any law, which is not forming part of remuneration, value of any house accommodation, EPF contributions by the employer, any conveyance allowance or any traveling concession being provided by the employer, any special expenses being incurred by the employee, and those have been reimbursed due to the nature of the employment. Then you have house rent allowance, is again similar, which is coming from the EPF Act. Tribunal settlement award, if any, which has been received by the employee. Any overtime allowance, which has been paid to the employee. Commission payable to the employee. Or 10th and 11th item, which is talking about the gratuity payable on termination, or any retirement benefits or retrenchment compensation, or any ex gratia that has been paid. Now, when you look at the definition also speaks about uh, the item number 1 to serial number 1 to serial number 9. These components have to be taken up with respect to calculating the exclusions part for the calculation purpose of 50% cap, which is there. We'll discuss how these caps comes into picture and how it will have an impact on the calculations in the next two slides to come. However, with respect to the calculations, we'll only look at serial number 1 to 9. Reason being, serial number 10 and 11 are not recurring in nature and would come into picture only in case once the termination or exit is happening for an employee. Second important point is, in case we have any remuneration which is payable in kind. Let's say we have the house accommodation, rent-free accommodation being provided by the employer. Now, in that case, if the overall value of the non-monetary benefits which have been provided in kind by the employer, if that doesn't exceed the 15% of the overall wages, then that much of the value will get under the inclusions category and not under the exclusion category. Now, for example, let's say my overall wages or overall remuneration payable to the employee is 1 lakh, which includes around 15,000 of house accommodation value, which is basically 15% of 1 lakh. Then this 15,000 will get under the inclusion category, and then there is no portion which will come under the exclusion category. But let's say in the same example, if the value of house accommodation is 20,000 instead of 15,000, the 5,000 which is over and above 15% of the overall wages will come and get under the exclusion category. Let us try to understand how this wages would get calculated based on a flow chart which we have prepared. Now, first, we'll start with establishing the base components. Herein, we'll try to understand what are the inclusions under the wages. Let's say you have basic pay, you have DRS allowance, or you have any retaining allowance or any other allowances which are not falling under the exclusion category. Apart from that, we will add up the remuneration which is payable in kind up to 15% of the overall wages limit, which we spoke about. After this step is done, basically we have tried to understand what is your inclusions for the purpose of the wages. Then we'll move to the exclusions part. We'll calculate the exclusions with respect to the 50% threshold that is provided in the Act, wherein any value or any exclusions which are over and above 50% of the overall wages, that exclusion will form part of the inclusions category, which is nothing but a deeming fiction we used to have in the earlier law. Let's say you have done the calculation, the exclusions value is coming more than 50% of the overall wages. Then whatever is excess over and above 50% will get added back to the wages. In case if your exclusions are below 50% of the overall wages, then there is no adjustment required for the wages or no adjustment with respect to the inclusions part. Based on this, your wages will get calculated under the codes. This wages will have impact on all your compliances and all your calculations which come in under each of those acts. Let us look at with an example how these will come in and how the calculations would happen. Let's say we have a salary structure for a few employees where we have tried to calculate this. The salary structure is something like we have basic salary, HRA, conveyance allowance, special, and you have employer PF contribution. Now, based on the wage definition, basic salary would come under the inclusion category, HRA, conveyance would come under exclusion category, special because it is not specifically excluded under the exclusions. So I'm including under the inclusion part itself. Employer PF contribution has been specifically excluded, so it is under exclusion category. Now, let's say we have employee A who has basic salary of 10,000, HRA of 5, conveyance of 2,500, special allowance of 5,700, and employer contribution of 1,800. Here, the HRA and conveyance are being calculated based on a percentage of the basic salary, which is, let's say, HRA is 50% of basic and conveyance appears to be 50% of HRA. And your employer PF is based on the existing 15,000 wage limit. Based on Supreme Court judgment, the 1,800 has been calculated. Now, in this case, first we'll calculate the excluded amount, which is your HRA, conveyance, and employer contribution, which comes down to 9,300. Then we'll calculate the 50% value of the overall remuneration, which is 12,500 in this case. Then we'll compare this 50% against the exclusions part. Now, in this case, 9,300 is well below the 50% ceiling. So there is no separate addition which will happen in this case. Let's say we have employee B, whose basic salary is 12,500. Similarly, HRA conveyance has been calculated. You have the special allowance which is there as a balance figure. And then you have employer PF contribution, which is coming as a part of the basic and allowances which are there. Now, let's say in this case, the excluded value comes down to 11,050, which is basically HRA conveyance and employer PF contribution. 50% of the overall remuneration comes down to 12,500. The Since the overall value is below the 50% calculation, there is nothing which gets added back. But let's say in the same example, if the exclusion value comes to 13,000 instead of 11,050, 500 rupees, whatever is over and above the 12,500 50% limit, will get added back to the wages under the labor code, wherein 13,950 plus 500 would get calculated. Then, assuming because special allowance is not something which is mandated by law. So let's say if we have a structure wherein there is no special allowance, then the calculation would appear something like this. Now, in this all scenarios, we are basically trying to restructure the salary to calculate the PF or keep the PF under a minimum level. However, if this is being treated as providing lesser benefits to the employees by the department, probably this structure would get questioned in such a way. So we'll have to be very careful when we are restructuring these cases. What you'll have to keep in mind is the structure needs to be prepared in such a way that you are taking into account the employees' designations, the employees' bands, the category of or the departments that they are working in while you are providing these allowances or making these structures. Right. Next, let us move to the fixed term employment, wherein the code has specifically formally organized or recognized the fixed term employment. Uh, so this fixed term employment was already in place, wherein certain industries were already using it, but there was no formal recognition to this kind of a contract. Now, in this case, um, what would generally happen is the employee is on a fixed term employment period, let's say for 1 year, 2 years or so. Uh, However, the terms of contract are not on par or in line with what the regular employees would receive. However, in case of fixed term employment, which is defined under the code, there is a requirement of having the equality of terms in terms of the hours of work, wages, or the allowances or any benefits that I'm paying to a permanent employee for the similar or same work nature. Apart from that, I'll have to provide all statutory benefits which are available to a permanent employee on a pro rata basis, irrespective of the qualifying category under the applicable law. This basically hits back in terms of the gratuity which is there, wherein the regular law provision says that in case of a permanent employee, gratuity is payable only in case of 5 continuous years of service. However, in case of fixed term employment, 5 years rule may not apply. Then we have something called national floor wage, which is introduced in the codes, wherein the code introduces the concept of national floor wage, which is to be fixed by the central government. However, the state governments will still have the power to notify the minimum wages, but they cannot go below the uh, national floor wage, which is notified by the central government. Now, the employers still have to pay or look at the minimum wages that have been notified by the respective states. However, that respective states minimum wages will only act as the floor wage will act as a base for the minimum wages to be set in. Let's say in case the minimum wage has been set in by the state, which is below the national floor wage, I'll have to still follow the national floor wage, which is over and above the state minimum wage. But let's say in case of the state minimum wage, which is over and above the national floor wage, then in that case, I'll still have to follow the state minimum wage, which has been notified by the respective state. So basically, what will happen is the national floor wage will only act as a benchmark, or which will try to create an upward pressure for the minimum wages in certain states, because each state has its own different geography and different set of work which is carried out. So we have a difference, different minimum wages which gets notified each year. Now, let us look at two other definitions which got provided in the codes. First, we'll talk about the gig worker. Gig worker is a person who performs or who earns through a work arrangement which is outside of a traditional employer-employee relationship. Second, we have something called platform worker, which is basically these are the ones who get engaged through a online platform that connects the service providers with the customers. Now, because of these two definitions, this will not give the benefit of getting accepted as employees right away. But these definitions, due to these definitions and the recognition in the code, they will get the benefit of certain social security benefits which have been provided under the code or the framework. Now, we have something called aggregator as well, which has been identified and captured in the codes. Now, the term aggregator is specifically defined to capture digital intermediaries that connect certain service providers with the users. Now, the code even has provided a list of the different kinds of categories of the intermediaries or aggregators which can be there. This has been provided under the 7th schedule. We have something called ride sharing services. Then we have food and grocery delivery provided under the aggregator list. We have the logistics services provider. We have the e-marketplace, B2B or B2C, which has been provided under the 7th schedule. We have the professional services provider. Then we have healthcare providers, travel and hospitality providers, content and media service providers. And then you have a residual category wherein any other platforms have been mentioned. Now, all this have been identified and provided under the 7th schedule of the code. These are all been identified by the government and provided here. Let us move to the first code for discussion, which is code on wages. Let us look into the acts that have been consolidated in the code on wages, which you have totally 4 acts which have been consolidated in this code. First one being payment of wages. Second one being the Minimum Wages Act, 1948. Third is the Payment of Bonus Act. Fourth is equal remuneration. The primary objective of the code on wages was to create uniformity in the definitions and reduce the fragmentation across different wage-related compliances. Now, for employers, if you look at, you have a single wage definition, which will now drive multiple statutory obligations, either in terms of the Bonus Act or Minimum Wages Act or the Equal Remuneration Act, just to come in. Now, let us look at the timeline of the code, how it was introduced and when it was introduced. First, it was initially introduced in Lok Sabha on 23rd July 2019. Later, on 2nd August, it was passed by the Rajya Sabha. On 8th August 2019, we had the president's assent to it, and this was notified in the Gazette. That's the reason you have the name of Code on Wages 2019 to it. Later, during COVID, we had on 7th July the central rules which were issued for public consultation. After July 2020, because the labor comes under the concurrent list, the center had to get the concurrence of all the states on this, and it has taken the government from 2020 to till 2025 to get the concurrence on all those, on all the codes, and have the draft rules prepared by the states. Finally, on 21st November, the code was implemented nationwide based on a gazette notification wherein they have notified the provisions of the code. On 30th December, you had the central rules, draft central rules issued, which were kept up for public consultation. And now the ones which are pending are you still there are certain central schemes or notifications which are yet to be notified. Then you have each state-wise rules that needs to be published for public consultation and then notified. Let us look at the structure of the code, code on wages, and how it has been divided in different chapters. You have the first chapter, which will talk about the code and the definitions. Then you have chapter 2 to 4, which will talk about the provisions under these earlier acts, which we spoke about, which are payment of wages, minimum wages, payment of bonus, and equal remuneration. Then we have the provisions pertaining to the advisory board under the code. Then you have chapter 6, which will talk about the payment of dues, claims, and the audit under these codes. We have a concept of inspector cum facilitator, which has been introduced. We had the concept of inspector earlier, but now it has been renamed as inspector cum facilitator. Then we have the chapter talking about offenses and penalties under the code on wages. And then you have certain miscellaneous provisions under the code. If you look at the notification on 21st November, all these sections of code on wages were notified. Let us look at the applicability of the code. Now, with respect to payment of wages, it is applicable to all the employees irrespective of the wages that they draw. Minimum wages, it is applicable to every employee, similar to payment of wages. Then you have Payment of Bonus Act, which is applicable to all establishments with 20 or more persons employed during the year. Then you have the Equal Remuneration Act, again applicable to all employees, and they have been extended to all the genders. In the next slides to come, we'll discuss about the changes or comparisons with respect to the earlier law and the new law, which is there in terms of the code. Let us look at the changes that have happened under the Minimum Wages Act, wherein under the earlier law, it was primarily applicable only to scheduled employments. However, in case of code on wages, they have made it applicable to all categories of employees, whether organized or unorganized. The code also removes the distinction between the minimum wages protection against the different employments. And in this case, the central government will fix a national floor level wage to remove this distinction. Apart from that, the central governments will still have the power to fix the minimum wages, which can be over and above the floor level wage, which has been defined under the or being provided by the central government. Then in the earlier law, we had the time limit of 6 months for the claims that can be made against the deductions made by the employer towards the employee. However, this time limit has been allowed till 3 years under the Code on Wages. Moving to the changes that have happened in terms of the payment of wages. First, the wage ceiling has been applicability has been removed, wherein earlier you had a wage ceiling of around 24,000 per month drawing wages employees applicability. However, now that wage ceiling has been removed and it is applicable to all the employees irrespective of the wages. Second, we have the electronic mode of payment being expressly recognized, aligning the law with the current payroll practices that are there. Third, we had the um, payment of dues related provision, wherein the earlier law used to talk about the settlement of dues within 2 working days in cases of only termination. However, in the courts, this timeline has been extended to resignations as well. So, wherein in case if there are any exits happening due to resignation, the 2 day timeline will follow in case of due to provisions of code on wages. Now, this will what this will do is this will bring in certain discipline in terms of the F&Fs that are happening with respect to the exits. Now, in the earlier law, you did not have any specified wage periods. However, in case of code on wages, different wage periods have been defined, whether it is daily, weekly, fortnightly, or monthly. These have been identified and provided in the code on wages. Let us look at the some certain changes that have happened in terms of payment of bonus act. First, we had the bonus eligibility, wherein in the code, the um, eligibility limit has still not been notified by the government. However, there is a provision wherein the government can notify this. Till the time government notifies it, the earlier law will still continue, wherein the 21,000 per month limit, which is applicable in the payment of bonus act, will continue to apply till it is totally repealed or the specific notification for the eligibility has been provided by the government. Second change we have in terms of accounting year. Earlier, we had the option of choosing the accounting year based by the employer. Now, in the code, it has been specifically provided wherein the employer has to follow a uniform accounting year, which is 1st April 31st March. There is no option to alter or there is no option to change it. Third, in terms of disqualification, earlier Payment of Bonus Act had the provisions with respect to fraud, theft, or violent behavior, wherein in these cases the bonus could be withheld or would be recovered from the eligible employee. However, in the code on wages, new ground has been added with respect to sexual harassment. Apart from that, the earlier uh, provision still continues with respect to fraud, theft, or violent behavior. Fourth major change in terms of the Payment of Bonus Act would be with respect to the payment mode. Earlier, we had the option of uh, payment in currency, coin, or cash in the Bonus Act provided. However, in the code, it has been specifically mentioned as the payment needs to happen to the employee's bank account. These are certain changes or highlights of changes that have happened with respect to Payment of Bonus Act. Coming to Equal Remuneration Act, uh, earlier we had the law talking about discrimination between male and female. However, now the code specifically recognizes all the genders, including transgenders, with respect to the discrimination of wage discrimination to come in. Apart from recognizing all the genders, the code also recognizes discrimination in terms of recruitment. Earlier, we had wage discrimination. Recruitment bias is also recognized by the code on wages. The code prohibits gender-based discrimination in hiring, promotion, or transfers. Earlier law did not have this. The coming to the inspector come facilitator. Now, the income inspector traditional role, whatever was there earlier, now has been recast and they are terming it as inspector come facilitator. The intent is basically to promote the compliance through the guidance from the inspector. Now, the inspector would basically advise the employer or the worker on the compliance. Apart from that, they'll handle the inspections which have been assigned to the inspector through the web-based inspection module which the state government may bring in. Apart from that, the inspector facilitator would also provide the opportunity to the employer to fix certain non-compliances before taking any action. So basically, if you look at the earlier law versus new law, there is certain relaxation which the inspector might bring in because he'll give you the advance notice of the inspection that is going to happen, wherein opportunity is given to the employer to make certain corrections in terms of non-compliance before any action is taken by the inspector. Now, let us look at certain obligations on the employer in terms of the wages and the timelines. Now, first would be to ensure that the equal wages or the similar wages are being paid without any gender discrimination. Second, the payment must not be less than the minimum wages that have been fixed by the appropriate government. When you look at the code, the terminology used by the uh, government is either appropriate government or state government or central government. We look at how what powers each of them have in terms of drafting certain things or having powers in terms of providing certain rules and regulations in the next slides to come. But however, in this case, because it says minimum wages to be fixed by appropriate government, the appropriate government is basically the state government in this present case. Now, there are certain timelines which have been prescribed based on the wage periods that have been identified under the code. First, if the wage period is on a daily basis, then at the end of the shift, the payment needs to be made. If the payment is on a weekly basis, then the payment will happen on the last working day of the week. In case of fortnightly basis, payment needs to happen on the second day after the end of the fortnight. In case of monthly basis, it needs to happen before 7th of the following month. Now, when you compare this with the earlier law, we had only two due dates in terms of the payment timelines under Payment of Wages Act, which used to be if the employee count is below 1,000, the due date is 7th of the following month. And if the employee count is above 1,000, the due date is 10th of the following month. All these have been replaced by the frequencies identified in terms of daily, weekly, fortnightly, and monthly basis under the code on wages. Let us look at certain obligations with respect to the employer in terms of compliance and records maintenance. Now, digital records or registers needs to be maintained either electronically or physically, and that needs to be preserved for a period of 5 years from the date of entry, which happens in those registers. Second, in terms of simplification, if you look at earlier, you had 24 registers, 6 returns under these 4 acts, which got replaced with 3 registers and 1 consolidated return. We have wage slip format as well, which also gets covered as a register, but I have not included here in terms of the count. Excluding that, you have 3 registers. Then you have the wage slip format being provided as in the code itself, wherein these pay slips needs to be provided to all the employees. Let us look at the powers provided to central government or the state government with respect to framing the rules. In case of code on wages, the central government has the power to frame rules with respect to floor wages, wherein they can fix the national floor wage or the state consultation related protocols which have been provided. Second, they can have the power with respect to discussion on how the gross profits needs to be calculated, set off and set on related procedures or rules which are there with respect to payment of bonus act. Third, with respect to some deductible sums, depreciation norms, all this again forming part of the payment of wages calculations itself. These can be provided by the central government. With respect to appointment of officers for the penalty inquiries, those rules can also be drafted by the central government. Let us look at the rules or the powers which have been given to the appropriate government or state government in this code. With respect to wage or work related norms, the calculation methods, the fixing the minimum wage or deductions in terms of short hours, all these can be provided by the state government. Provisions with respect to loan recovery, absence related, LOP related protocols, or damage assessments related rules can be provided by the central government. In terms of compliance, registers, wage slips, display related provisions, all these can be provided by the state government. With respect to affiliate authorities or undisbursed dues deposits, how that has to be managed, all that can be provided by the power has been given to the central government to frame those rules. Let us look at the offenses and penalties in terms of the code on wages. First, in case the payment is made below less than the due wages. In case of first offense, the penalty is up to 50,000, which has been provided in the code. In case of a repetition within 5 years of the similar offense, you have the provisions with respect to imprisonment, which can be up to 3 months, and or a fine of up to 1 lakh rupees. Let's say in case of default of payment of wages, minimum wages, or bonus, any compensation has been awarded by the tribunal or the inspector, that can be up to 10 times of the value of the claim which the employee would have made. These are the provisions which have been provided with respect to payment happening below the due wages or which is due to the employee. In terms of contravention of provisions, wherein in case of first offense, the penalty has been provided up to 20,000. In case of repeated offense or repetition of offense within 5 years, imprisonment up to 1 month and or fine up to 40,000 has been provided. In case of non-maintenance or improper maintenance of records or falsification of records, the penalty has been provided up to 10,000 rupees. Now, we have certain questions we have drafted in terms of the code on wages to understand and to analyze the participation that we have and how active they are. So let us look at 4 questions I have here. Let us look at one by one, and probably you can use chat to provide the answer to each of these questions. So the first one being, let's say, what would happen if the excluded salary components exceed the 50% total remuneration? That there is no impact, or let's say the entire salary becomes wages, excess over 50% is added back to the wages, or the employer can choose any treatment. I see that majority have answered option C. Yes, the correct answer is option C. Anything over and above 50% will get added back to the wages with respect to the deeming fiction which is there provided in the law. Now, in case of minimum wages under the code, they will now apply to A, scheduled employments only, or to employees earning below 24,000, only factory workers, or all the employees. Right? As majority have said, the answer is D. The minimum wages will apply to all the employees across all employments, whether it is organized or unorganized sector. The 2-day working timeline, which has been provided for the settlement, this will apply to what kinds of cases? Only terminations, only resignations, only for workers below 24,000, or only if it is mentioned in the company policy. I see combined answers of A and B. However, I would just like to clarify. First, yes, it applies to resignations as well. However, whatever was there in the earlier law with respect to termination or retrenchment will still apply. Apart from those provisions, it will also now apply to resignations as well, which was not covered by the earlier law. Now, in case of fixed term employees, what are the statutory benefits or when they'll be made applicable in terms of gratuity? whether it is on a pro rata basis or only if the employer approves it. Is it only after 5 years, similar to the Gratuity Act which we had, or they are not entitled to any statutory benefits as such? Yes, the answer is A. They will get entitlement to the statutory benefits on a pro rata basis upon completion of a minimum of 1 year. Let us move to the code on social security. With that, we have completed code on wages part which I had to discuss today. Let us look at the code on social security and what are the changes that have happened, how that has been amended, and what has been notified. So you'll have certain slight variation when it comes to code on social security compared to code on wages, where it was notified at one go. We had different uh, points of notifications for code on social security. But before that, let us look at the different acts that have been subsumed under the code on social security. We had the Employee State Insurance, Employees Provident Fund, Employment Exchanges Act, Maternity Benefit Act, Payment of Gratuity Act, Employees Compensation Act, Senior Workers Welfare Fund Act, Building and Construction Workers Cess Act, and the Unorganized Workers Social Security Act. All these 9 acts got subsumed into Code on Social Security. Now, let us look at the timeline as to how this code has come into place. So we had the first notification in September 2020, wherein it was passed in Rajya Sabha. Prior to that, it was introduced in Lok Sabha and it was passed. However, in September, it was passed in Rajya Sabha. Later, we had in the same month the assent received from the president, and it was notified in the official gazette. Then you had certain notifications coming in the year 2021, 2023, and then now in 2025 with respect to certain provisions which are notified based on these gazette notifications. Now, on 3rd May, you had notification wherein they had notified section 142 with respect to Aadhaar-based authentication for UN or other East from related provisions which had come in for the workers' registration. Then on 3rd May 2023, you had notification wherein major provisions of employee pension scheme related were notified from the code on social security. Post that, you had the notification in November 2025, where earlier, excluding the earlier provisions which already got notified, all other major provisions got notified in the November notification. 30th December, you had the central draft rules issued for public consultation, and we still have the central schemes, notifications, or state-wise rules to come in, which also includes your EPF related scheme, EPS related scheme, or the ESI schemes, which are yet to be notified by the government. Now, let us, so in the earlier slide, we saw that there were certain notifications issued in 2021, 2023, and 2025. Let us look at what those were and which sections they were trying to enforce in those notifications. Phase 1, as I've already mentioned, section 142 got notified. Then in phase 2, you had the EPS related provisions, section 15.3, 16.1, 16.2, and 143 and 164 notified in this phase 2. Third phase, which was a major rollout, wherein your definitions in the code from section 1 to 14, EPF related schemes and provisions from section 15 to 16, then each chapter wise provisions from section 17 to 141, and miscellaneous provisions with respect to repeals and other provisions from section 143 to 164 were notified in this notification on 21st November. Let us look at the structure of the code. What are the chapters and how it has been divided. First, you have the chapter 1, which will talk about the definitions and preliminary context to the code. Then you have the social security organizations spoken about in the chapter 2. Then you have chapter 3 to chapter 8, which will talk about the compliances and provisions with respect to all the acts which got subsumed in code on social security. Then you have chapter 9, which speaks about unorganized gig and platform workers. Then you have chapter 10 talking about finance and accounts, similar to what we had in the EPF Act and scheme. Chapter 11, we have the authorities, assessment, compliance, and recovery related provisions provided. Then you have chapter 12 talking about offenses and penalties. Chapter 13 talking about the employment information and monitoring. This is basically um, falling from the Employment Exchanges Act, which was there earlier. Then you have the miscellaneous provisions, which we spoke about in the earlier slide. All this form the code on social security. Now, let us look at certain applicabilities which have been provided in the code on social security itself with respect to the acts that got subsumed over there. First, you have the EPF Act, wherein the applicability threshold still remains the same, like the earlier law, it is 20 or more employees. Second, with respect to ESIC, the major change is in case of hazardous or life-threatening occupation. Earlier, there was no provision as such. Now, you have mandatory registration under ESIC with respect to hazardous or life-threatening occupation cases. Under gratuity and maternity, the provisions are same. With respect to factories or mines, with power it is 10, without power it is 20, and for all other regular cases, you have 10 plus employees with respect to applicability. Fourth, with respect to Employees Compensation Act, which will apply only in cases where the employers are in railway, mines, or factories, where ESI has not been enabled or has not been notified. Only in those kind of cases, the employee compensation related provisions would apply. With respect to building and other construction workers cess Act, the applicability is 10 plus employees or more. Apart from the BOCW Act, you will also have the ESI related provisions which will get applied in this case as well. For gig and unorganized sector, there is no limit. All no threshold has been provided. So any or all workers will get covered under the Gig and Platform Workers Act. For the purpose of employment monitoring, you have a 50 plus employees threshold, which has been provided for private establishments. In cases of certain other establishments, the limit has is still 20 plus. But for the purpose of discussion and presentation, I have covered what is applicable for the private establishment. Let us look at certain key changes that have happened compared to the earlier law and then code on social security. First, if you look at the earlier security coverage, it was restrictive in terms of the coverage of employees. However, in case of social security code, you have the recognition of gig, platform, and unorganized workers as well under the code ambit. Second, earlier electronic registration was not mandatory. However, in practical scenario, the registrations with respect to UN or ESIC were still happening in electronic mode only. But now under the code on social security, these registrations has to happen mandatorily in electronic mode. Then you had certain different wage definitions under various laws. We spoke about 9 laws. Each of the act had their own set of definition for the wage or salary. In Code on Social Security, it is the same uniform definition of wage, which we spoke about in the starting of the session. In the earlier law, you did not have any voluntary ESI option. Now, voluntary ESI coverage has been provided in the code, similar to the voluntary coverage which was there, voluntary coverage provisions which were there in the EPF Act earlier, wherein if majority of the employees provide the consent, then this can be applied. Next change is with respect to gratuity, wherein earlier law you had the requirement of 5 continuous years of service for a regular employee. Now, apart from the regular employee cases, you have gratuity, which is provided to the fixed term employees as well. This has been covered under the Code on Social Security. Few benefits which have been provided to gig, platform, and unorganized worker would include benefits in terms of life and disability cover, provident fund, health and maternity benefits, old age protection related benefits, education and housing, and skill upgradation. Apart from unorganized workers, we have certain benefits for gig and platform workers as well, which have been provided in the code on social security, which would include the accident insurance, life and disability cover, health maternity, creche facilities, or old age protection related provisions which have been provided in the code. However, it is important to note that the exact contributions or how the funding structure would happen, how much of contributions needs to be made by the platforms with respect to these kinds of schemes, still are yet to be notified by the government. So unless and until that comes in, the impact of these provisions will be difficult to ascertain. Having said so, the direction is very clear that they would want benefits to flow to the gig platform or unorganized workers as well. With respect to eligibility or registration of gig workers, we have the age-related eligibility, which is 16 to 60. Then you have engagement-related requirement, wherein if 90 plus days of work has been done in the last financial year, then you are eligible for getting registered under the platform as a gig or platform worker. Third, documentary proof-wise, linked Aadhaar and UN is required. Now that Aadhaar can be created by the employees or by the person itself through the Umang app. So this is possible if there is a Aadhaar linked number which is there. Fourth, all these registrations have been provided on a self-declaration basis via the portal or app which I spoke about, the Umang app. So the registration has been shifted primarily from the employer to the hands of employees or workers itself. Now, we spoke about employment information and monitoring, which is flowing from the Employment Exchange Act itself, wherein in the code they have defined something called as career centers, where these are replacing the previous employment exchanges uh, definitions which were there. Now, these career centers will act as reporting offices with respect to the vacancies which are there in the company. Now, the obligation is that the vacancies needs to be reported to the career centers 15 days prior to the vacancies being filled up or vacancies being created. Now, this 15 days limit is for the regional offices in place, and 40 days is for the uh, central related offices, uh, central government related offices which are there. After the selection, again, the reporting needs to happen with respect to the selection which has happened and the closing of the vacancy with the career center. This needs to happen within 30 days of the selection. At the year end, you have annual return that needs to be submitted, for which the due date has been provided as April 30th. The point to note is the provisions with respect to career centers or the creation of these career centers or the schemes with respect to these career centers have still not been notified by the government. These are with the central government itself as of now. Now, I've kept one slide to discuss on certain provisions with respect to ESI and EPF and how there is a gray area with respect to these two acts. Now, when you look at the background or when you look at the way the sections have been notified, you have a new definition of wages which is there under the code, which is already notified on 21st November. Then you have something called section 164, which talks about transitional provisions with respect to repealing of the previous acts and certain provisions with respect to continuation of the existing schemes. When you look at section 164, subsection A, that will talk about the repealing of the acts. Subsection B is talking about a provision wherein the ESI and EPF Act, earlier EPF Act, would continue for a period of 1 year. This is a transitional provision which has been provided. This kind of provision is not there in the any other codes which are there. Now, when you look at section 15 and section 16 of the Code on Social Security, it's talking about the notification of schemes under the new framework. Now, these schemes are still not notified, and these needs to be notified by the central government. Then you have section 29, which is talking about ESI related contributions to notified benefits that has also not been notified. Now, when you look at the interpretation, now you have section 164 enabled, notified, which is repealing your earlier acts. Then you have the new definition, which is already in force from the courts. But again, you have a transitional provision, which is talking about continuation of ESI and PPF schemes till the new schemes are notified. Now here there is some alignment issue with the section and with the schemes which are not yet notified. So in that context, there is still some gray area with respect to ESI and EPF related provisions as to what needs to be followed. But if you look at our view, the based on the reading that we have in terms of the definition and the sections that are flowing, until unless the schemes are notified by the government, the sections with respect to 15 and 16 or with respect to contributions under section 17 needs to follow the previous law, which is continuing in the section 164B, which has been provided for a period of 1 year. Even though the period is provided as 1 year, there is still a provision which says until and unless it is repealed. Now, there can be a certain notification which can come in from the central government, wherein they are repealing the previous schemes and they are bringing in the new schemes which are notified under section 15 and 16 of the Code on Social Security. Similarly for ESI schemes as well. Now, similar to Code on wages, we have certain powers which are divided between central government and state government with respect to framing of certain rules and procedures. First, in terms of social security and coverage, with respect to applicability of ESI and EPF or providing any exemptions, that can be provided by central government. In terms of constituting the National Social Security Board or framing the schemes for gig and platform workers, which I spoke about earlier, all these is with the central government to frame. Next, with respect to career centers or other usage, it is with the central government. Maternity benefit related provisions with respect to creche and nursing breaks is still with central government. There is certain provisions with respect to crisis management, wherein in case provisions or in case of situations like pandemics, how the deferment of contributions needs to happen. Those kind of provisions or rules can be framed by central government. Then you have certain powers provided to state government or appropriate governments with respect to framing of rules. First, you have rules with respect to board and courts, wherein power with respect to framing of rules with state building workers welfare board terms can be provided. Employee insurance codes related procedures can be provided by the state government. Then you have certain provisions or rules pertaining to compensation and reporting. Then we have powers with respect to session funding, certain financial administration related schemes and procedures, and operational and reporting related rules with respect to the employment exchange would come in with the state government once notified by the central government in terms of creation of the career centers. Then we have certain offenses and penalties provided in the Code on Social Security. First is failure to pay the contributions deducted from the employee but not paid to government, which includes imprisonment from 1 to 3 years and along with a fine up to 1 lakh rupees. Then we have failure to pay the employer contribution, imprisonment which can range between 2 to 6 months, along with a fine of up to 50,000 rupees. Then we have dismissal during pregnancy or obstructing inspector or falsifying records. Under this, we have imprisonment of which ranges between 6 months to 1 year, along with a fine of up to 50,000 rupees. Then you have non-payment of compensation, reducing wages, or failure to submit the returns. You have a fine of up to 50,000 rupees provided in the code. And in case of any repeated offense, you have imprisonment of 2 to 3 years along with a fine of up to 3 lakh rupees, which has been provided. Now, in term, I have certain FAQs similar to code on wages, which we discussed. We'll just take one by one, and then we'll move to how the roadmap of the implementation of these steps that needs to be taken now by the professionals or organizations in the next slide to come. Let us look at the first FAQ. We are talking about Social Security Code, gig and platform workers. Are these recognized, not recognized, or treated as employees, or are formally recognized for Social Security framework, or are they covered only if they are earning below the minimum wage? You can provide the answer in the chat box itself, and we can take it up. I see that the majority have answered the option C, and the correct answer is option C in this case, wherein the gig and platform workers are now formally recognized under the Social Security framework. Let us move to the next question. EPF applicability, is there any change in the code? Is it 10 plus employees, 15 plus employees, 20 plus employees, or all establishments? Right. So I see majority of the participants are active, and yes, the correct answer is 20 plus. Still, the provision of or the threshold of 20 is followed from the previous law. What about pro rata gratuity without the 5-year condition? For whom it has been provided? The majority have answered the option B, which is the correct answer. Next, let us we have a question with respect to career centers. Now, I have mentioned the threshold for regular cases as well as private establishments. What is the limit for the private establishments in this case? Yes, I see that majority have answered the option A, which is the correct answer. Now, let us move to the roadmap, which I was talking about, and how do we move in terms of the codes which have been notified. Now, this slide will summarize the roadmap. Now, first we are talking about the notification which came in, where the codes were notified. Specific statutory transition period was not provided for the implementation for those acts. However, you had certain provisions wherein the earlier laws were still made active and be parallelly run in until and unless they are not inconsistent with the code. This is what the language that they have used in the code. Then what we'll require is first we'll have to align all our policies which are there in place, whether with respect to your F&Fs, payments cycles, or the payroll processing, or the HR systems which are there in place with the updates which have happened in the code. First, it would be that. Then you will have to also look at the notifications which are coming in terms of central or state governments, which are wherein they are notifying the rules. They will notify the certain sections which are not yet notified in the earlier notification, but are still yet to be notified. And you also have the states wherein they have the draft versions of the rules which are already in place. It's just that they have yet to notify it. These needs to be looked into. Apart from that, you have the old laws which will still continue until and unless they are not inconsistent with the new codes till they are formally replaced. This is in with reference to the PFES and other acts which I was talking about in the earlier slides. With respect to the professional opportunities which are there, when you look at the codes which have come in, they are first there is demand with respect to the impact assessment with respect to the codes and understanding or having a gap analysis done. This gap analysis would include the changes in the procedures or processes, or the contributions that needs to happen, or the outflow that will happen once the codes are fully implemented. Wage structure review, which is there, or any optimization as such that needs to happen in the existing wage structure. Then you have contract labor and workforce structure related opportunity as well. Reason being, this flows from the Industrial Relations Code and Occupational Health Safety, wherein different definitions with respect to workers have been provided, and you have something called core and non-core activities being provided. We'll discuss when we are talking about those codes in detail. However, the structuring would require with respect to the core and non-core areas of work. Reason being, there is a restriction in terms of having contract labor in the core operations from the code point of view. Then you have safety and facility compliance reviews, which will come in terms of the occupational health safety, which is there. Then there is another opportunity with respect to implementation and transition support, wherein the requirement can come in terms of the policy and employment contracts redesign with respect to the new provisions which have come in. Second, payroll and the HRMS systems alignment with the new code, new wage definition, which is there. Third, you have the opportunity with respect to standing orders and industrial relations framework support. Reason being, earlier the standing orders had the eligibility or the threshold of 100 plus employees or more. Now the threshold has been shifted to 300. However, the provisions and the implementation is provided through the rules, and all these model standing orders needs to be implemented as how they have been provided in the central rules. These standing orders will talk about your leave, the work shifts, or the working conditions related procedures and policies. Fourth, you have requirement in terms of having a compliance calendar in place, or help assistance in terms of the audit readiness. Apart from that, apart from the first initial impact or the implementation support, there can be requirements in terms of the ongoing compliances and monitoring, wherein periodic health checkups can be taken up. Support can be provided in terms of digital registers and returns filing related support. Third, in terms of inspection preparedness or representations, which can flow in. Fourth, in terms of litigation support with respect to the labor law matters. And fifth, in terms of multi-state compliance management. Reason being, each state has its own powers which have been provided under the code. All these needs to be looked into and closely monitored for changes that are happening. Right. With this, I'm through the presentation. Thank you for your time and participation. If there are any follow-up questions or implementation discussions which you would want to discuss with me, we can take it up offline. I'll keep it open for the floor for questions that we have. Thank you.
Thank you, Raman sir, for the insightful and practical presentation. We'll now open the floor for the Q&A session. I request participants to please pose their questions in the chat box.
I see one question with respect to Shop and Adjustment Act and Labor Welfare Fund. Hi, Santoshji. These two acts are still outside of the codes which are there, and these are governed by the state rules and regulations only as of now. These are not part of the acts under the which got subsumed under the codes. Yeah. So whether basic salary should be 50% of CTC. So what it says is the wages needs to be 50%, a minimum 50. It doesn't say basic should be 50. Now you can have other inclusions as well, which are coming under the wage definition and which is fulfilling your 50% category. Generally, what happens is DNS allowance is not a component which the private sector gives. So if you look at that way, then yes, you have only basic or retaining allowance, which is falling under the inclusion category, or any special allowances which are not tied up to any specific role or the designation that the person is holding. Then yes, these only will get form part of the inclusions part. With those inclusions should be minimum 50%. The condition provided in the wages is wage definition is your exclusions cannot cross 50% of the overall wages. If in case if it crosses, whatever is excess over and above 50% is anyhow getting added in your wages. So what will happen is recalculation would happen with that deeming fiction for all your compliance purposes. Even though your structure doesn't have it, still this recalculation will happen, and whatever is the wages based on the wage definition, on that the compliance needs to happen. Now let's say, for example, you have the EPF Act which is there at present. Uh, Under EPF Act, if you read that in combination with the Supreme Court judgment of 2019, Surijyoti, you will see that any allowances which are forming part of the salary structure, whether if those are being uh, uniformly paid to all employees, those are basically you are camouflaging your basic into different allowances. So department is adding those back into the wages. Same way, you will have this similar working happen with respect to your wages definition as well, where this reworking would happen and this deeming fiction of 50% will come in. Anything over and above 50% of exclusions will get added to wages, whether you keep it 50% or not. The provisions with respect to inspector come facilitator have not been notified by the government. Once those schemes come in, probably we'll be able to see the uh, working structure of who can be the inspector and what will be the role of that inspector specifically. There are still certain uh, schemes or notifications to come in. Once those come in, along with the respective state rules being notified, you'll have a complete picture which will come in. There are many provisions where the rules are there, but the specific provisions with respect to career centers or with respect to uh, the appointment and all, these have not been notified. Right. Let me take up if basic is more than 15, can be paid PF on 15 or to be paid on basic. Right. So with respect to EPF contribution, the contribution will happen on the wage ceiling. You have two options. One, if the employee wants to remit anything more than the wage ceiling, which is there, then that can be done under VPF, which is Voluntary Provident Fund. In case if the employer also wants to do a matching contribution similar to employee, then they'll have to provide a joint declaration to the EPF office, and that can be done. There is no hard and fast rule or provision that employer needs to match the employee contribution over and above 1800, which is the statutory limit. That is the first point. Second point, in case if the employee wants to do it over and above 15, that can be done under VPF. Right. Uh, Hope I have answered the wage ceiling related point. If the salary structure contains flexi benefits like travel allowance, Sodexo, gym allowance, etc., then the same is included in wage definition. See, what you'll have to do is you'll have to look at the allowances which are being paid to the employees. What kind of employees that is being paid, whether it is or is it to do something with the designation that they're holding. If it is something based on the designation or the work that they are doing, and those are being provided as on a reimbursement basis, then you can take a stand that it is not a earning which is happening to the employee, and you can put it under the exclusion category under the expenses part. But in case if that is not being demonstrated or documented properly, department may consider that these are being camouflaged as allowances just so that that is not falling under the basic, and they might move it to the basic or inclusions part, I would say, under the wage definition. which organizations labor code is applicable. We spoke about code-wise applicability uh, to the organizations. Say, for example, just to recap, code on wages is applicable to all the organizations. There is no uh, threshold limit. But in case of code on social security, we have certain thresholds which are there. I'll just um, share the screen again. This slide, we spoke about the applicability of the code. So same way, you'll have applicability for each code as well. EPF, you have 20 plus employees or more. Then you have ESIC limit is there. Gratuity maternity, you have a limit. These thresholds are not there in code on wages, it's actually provided in code on social security. For code on wages, it is applicable to all organizations. Gratuity payout to regular employees after 2111 should be paid as per new wages definition. Yes, that is a gray area under gratuity as well. But if you look at the repeal that has happened, there are no schemes as such under the Gratuity Act. So what will happen is your payout will need to happen based on the wage definition which is there under the code. The payout reason being, when you look at these codes, they are not talking about prospective, retrospective. They are talking about retroactive way that they are being applied. When I say retroactive, it basically means you are taking the old law and you are continuing under the code in the same way as if this code was there from the day one or the law was there from day one. That's how that needs to be read, because it is giving you only in case of PF and ESIC, it is giving you transitional provisions, but otherwise all other laws, the wording used is they will continue to work as if they are there from day one and until they are repealed and until they are inconsistent with the code. That's how the wording is. Basic is less than 15. Should we pay 1800 or should we can pay less than that? So as I mentioned, Trisha, with respect to EPF and ESIC, that gray area is there with respect to the contributions that needs to happen. Reason being, the repeal has happened with respect to the acts. However, new schemes did not get notified under the code on social security. Until unless those schemes come in, ideally the calculations for the wages to happen can happen only if the schemes are in place. Till the time the old schemes are being continued, I feel that the contributions needs to happen based on the previous schemes, not on the old scheme. Previous schemes, if you look at the EPF scheme, the para 29 talks about the contributions to have to happen on basic wages. Is there a time limit to implement these changes? So as I mentioned in the notifications that have come in, there is no transition provisions that have been provided. You have certain sections of the codes which are notified. You have certain sections which are not notified, or even though notified, the provisions or the schemes with respect to those or the rules with respect to those are not yet notified. So ideally what will happen is your code needs to be looked into with the respect to rules and regulations for it to get implemented fully. Till that time happens, you will have to look at the earlier law and the combination of your codes which are there with respect to the compliance. Next, can you name the 3 registers to be maintained? I'll just share those in the chat box itself. One is the muster roll. Second one, we are talking about the attendance related registers, which is there. Third one is talking about the employee register that needs to be maintained. All these are provided in the code itself as annexures or next we are talking about explain the process of covering the gig and organized workers under the Code on Social Security, and would casual workers be coming under the same ambit? See, with respect to the policies of gig and unorganized workers, these are not yet notified. Unless those schemes are notified, the way it will be implemented, what are the contributions to be made by the platforms, or how the benefits would flow to the unorganized workers or gig workers, that will be dependent on the schemes itself. Unless schemes are there, we'll not be able to comment on that. If gross salary of an employee is 42, 50% of it is 21. In this case, whether he needs to be called under ESI. See, first we are looking at earnings of an employee. You will have to look at the employer contributions and as well when you are looking at the salary or wage calculation. As I said earlier, for with respect to ESI and EPF, that gray area is there in terms of the wage computation. But in case, let's say the schemes are notified and the wage definition needs to be looked into, then yes, the calculation of assuming 42 is the overall earnings, 21,000, 50% minimum of it will come to 21. You will also have to look at the structure that you have in place. What are the inclusions and exclusions? If the inclusions are to be added to this 21 and it is going beyond 21 based on the limit at present, then ESI will not be applicable to that person. But in case in the scheme, if they notify some other limit instead of 21, then you'll have to look at that limit as well. At present, because we are looking at the ESI Act, the limit is 21. The limit can be changed in the schemes that will be provided by the department. There are certain discussions going on from very long time that EPF will get shifted to from 15 to 21,000 limit. So all that will come to know once the schemes gets formulated and notified. Until that, your old schemes and your old thresholds are still in place. PPT will be shared in the group. If we have any other, I feel I have answered all the questions. If you have any other questions, you can post it in the chat box. I'll try to answer them during this session itself.
I think we are done with the questions. We can now wind up. Thank you once again, sir, for sharing your valuable knowledge and experience. And I sincerely thank all the participants for joining us today and for your active engagement. Have a good evening. Thank you.